I am Glendy. I'm the Chief Product Officer of Tassat. Tassat is a blockchain payment and settlement company. So I'm going to hand it over to Alan.
Great. Good morning, everyone. Alan Lau, CBO of Animoca. We're one of the few homegrown unicorn in Hong Kong, very active investor in both blockchain and AI. You probably have heard of us or know us for our NFT and GameFi Metaverse project, but recently we've been spending a lot of time on our stablecoin partnership and also building up a DeFi platform. So very happy to share, as you said, one of the most exciting convergence of two very big narrative, which is AI and crypto.
Hi everyone, I'm Geoff. I work at Standard Chartered Bank in our corporate and investment bank. You can probably tell from my job title, which is very non-descriptive, that I work in a TradFi institution, if you didn't know what Standard Chartered Bank was in the first place. But in my role, I'm responsible for looking at some of our innovation projects, specifically digital assets, as well as AI. Thank you.
Good morning, everyone. Hey, good morning. It's Marcos here. Work with a lot of work with what Alan is doing across AI, blockchain as well. And in my day-to-day job, it's about figuring out how do we bring AI and land AI on enterprise scale within the organization.
Hi all, I'm Rocky Mui. I'm a partner at a law firm, Clifford, and I cover our asset management and financial regulatory practice and also fintech practice. So what we do, we regularly advise our clients on whether it's product structuring, licensing, or other compliance issues around digital assets. And of course, the AI topic is something that we'll cover as well.
Great. Before we step on the stage, we actually had some very interesting conversation in the speaker room. So I'm hoping to bring some of these interesting topics onto the stage. So I'm going to start with you, Alan. So Animoca has some very interesting project tokenizing real-world asset, as you mentioned. From your experience, how can AI actually streamline these real-world asset tokenization the process to improve the efficiency and also maybe reduce cost?
Right. I think this is the room that understand that blockchain is going to bring a lot of cost benefit. It's faster, it's more efficient, it's verifiable. So with that upgrade in the operating system of finance, you need the actual asset to be efficient in the same way, because there's no point for the rails to be very fast, but the asset to be very slow. So one of the assets that we're actually working with in the real-world asset tokenization world is HELOCs from Figure. So you might have seen a very successful US IPO a couple of months ago by Figure Technology. And what they do is they mint secondary mortgage on-chain natively. So when you go apply for a mortgage, you go to the website, and instead of the usual 45 days in order to get all the approval and get the money, you can do it in 5 days. Instead of processing costs that is thousands of dollars, it's just a couple of $100s, right? So there's real innovation because they use blockchain natively, and also they use AI to do the credit screening. The product is tokenized much faster. And once you have that, then it makes sense to actually put it on blockchain rails. And they're selling, even before they partner with us, they've been selling 1 billion of these HELOCs loan every month to the Goldman and KKR of the world. And our partnership is really around bringing that great asset to the broader public, right? So I think AI was really instrumental in creating the consumer experience, the credit rating, and also the approval to increase the velocity of the asset so it matches the efficiency of the blockchain rails.
That's really interesting. Marcos, so we talk about some of the idea about how the two technology in tokenization and AI. Do you have any experience to maybe add on to that?
Absolutely. I think if we extend any of the RWA tokens, how we adopt them, a lot of the focus is obviously on how do we get access to it, how do we verify it. But if you take the other sense, where the regulators, the auditors, or the accountants would come in, it's about how do we use that blockchain? How do we actually see what's happening in real time? And when you apply the AI lens these days, with the multiple different kinds of frontier models, the AI agents in there, they all have a role to play to ensure that it's safe, it's verifiable. And that's where the blockchain or the distributed ledger comes into play. Now, we can see the different firms coming out now with their own ways of seeing what's happening on the chain, right? Are there things happening in chain that is a bit odd? How do you have the early warning systems in there? So what we're seeing as a trend right now is there are multiple agents doing different work or different personas, making sure that things are happening as it actually is.
So you touch a lot on the financial side of it, like the money movement and how those transactions actually happening. So I know one of the hot topics in 2026 is stablecoin. So that's actually what everybody's talked about, especially with a lot of regulation passing in different jurisdiction. So Geoff, stablecoin is a hot topic for banks and also financial institutions. How do you see AI being a part of that? Especially when it comes to maintaining the peg and also how it pegged to the traditional currency, and what challenges that you see leveraging this technology?
Sure. So I think we need to acknowledge some, harsh truths here, even if we have a very kind of grand maximalist vision for how, these technologies are going to transform the world. So first of all, as it pertains to the real world, I would say that we have definitely seen AI add value in very specific domains. They really are around software engineering. They're really around things like customer service and things like operations and kind of risk and compliance. Now, often in most organizations, and we try to be a little bit different about this, but in most organizations, the AI work is almost entirely separate from the digital asset work. And so, it isn't often that the two kind of get joined up. And realistically, I think when it pertains to, talking about the real world outside of a crypto ecosystem, there's still, huge amounts of catch up to do in terms of kind of bringing blockchain technology to whether it's money or whether it's assets. So today, the marriage between AI and digital money, whether that be tokenized deposits or stable coins, those two worlds are relatively separate still, for the most part. There may be pockets of activity here or there, but to my mind, I think this is an absolutely perfect use case in terms of managing stablecoin liquidity and managing reserves. For these two technologies to kind of combine. Now, if you're a stablecoin issuer, ultimately, what are you trying to do? You're obviously getting fiat money in, and you're issuing a token. And behind the scenes, you're very simply managing a set of typically high-quality liquid assets, whether that be cash deposits, or whether that be T-bills, or whether that be money market fund tokens, et cetera, et cetera. But really, it's a very, very small universe of assets that you're actually managing. And I think that's actually the perfect use case for thinking about how you could actually revolutionize treasury management and liquidity management using AI agents, because it's actually a pretty simple deterministic problem. I mean, it's simple insofar as the universe is pretty small. I'm not saying it's simple in terms of predicting exactly how much liquidity you need, et cetera, et cetera. But the problem we face today is that AI agents at scale have not been deployed in any meaningful way in terms of finance, realistically. I think there's a lot of promise, but they haven't been deployed at scale. There's still a lot of regulatory concern about the probabilistic nature of using AI agents in these sorts of very sensitive foundational kind of use cases. Ultimately, we're talking about the foundations of the financial system. And ultimately, of course, still, for a lot of programmable money use cases, we are still super, super early. Ultimately, stable coins have really only so far demonstrated any meaningful utility in a very narrow kind of crypto ecosystem to date. Now, obviously, we as a bank, as many of our peers, are hoping to bring some of that technology to the real world and sort of bring some of that benefits of programmability. But I think we need to be honest here. Those two worlds of AI and programmable money, they're almost like two different worlds today. But I'm very hopeful for the future that these two are going to meet.
Cool. So Alan, you mentioned about the HELO tokenization. So do you see that stablecoin may be part of those as a currency for those transactions? And how do you see AI and the real-world asset tokenization and stablecoin, maybe they intersect, or how do you see AI may actually be able to facilitate the process?
Yeah, I think because HELOC is natively minted on the blockchain, the only way to buy it and access it is via stablecoin, whether it is USDC or USDT or any other local currency stablecoin, right? So, and I think that would drive stablecoin adoption, and that really is, to your point about, it's 300-ish billion right now. Is it a very big number? Not really, right? But I think as there's more higher quality asset come on chain, it will attract more people coming in, right? So HELOC is the boring product. It's 8-9%, but right now there's a lot of people starting quant fund of fund or other DeFi strategy that has returns in the teens or even in the 20s, and I think that will attract more capital. So that's the first point, right? On the second point of AI and crypto, I think one of the major use case is going to be around the world of the agentic web, right? So if you think blockchain has actually disrupted a lot of industry, whether it is gaming and entertainment, that's the first phase. What you're going to see is blockchain is going to enable AI agents, right? So for those of you that has paid attention, you may have seen that Vitalik has announced the ERC 8004 standard, which is really around giving identity, validation, and also reputation registry to an agent, right? Because how would I know that this agent has done what it claims that it has to do? How would I know where it came from, who owns it, right? So now there are blockchain standards that actually allow agents to verify themselves and to prove that they've done what they have done, right? And that's the perfect use case of blockchain, right? And then the other thing is, with standard like X402, it become a very simple payment method for agent to transact. Again, when agent in the future transact, they're not going to take out a credit card or use cash. They're going to use digital currency, stablecoin or other tokens, right? So, now I think we're seeing a whole set of blockchain infrastructure that is enabling AI agent to function. So I think that would be, I think that is a much bigger matter than what we've seen in sort of the first wave of crypto and AI convergence in 2024.
Cool. So stablecoin payment, they're all money movement. So I'm sure that when we talk about money movement, compliance and a lot of regulatory side, travel rules come into place. So Rocky, so I want to hear from your perspective, how do you see these AI-driven solution can actually facilitate the compliance of RWA tokenization? Or what do you see maybe the risk or the benefit on both sides?
Yeah, because I think it's always an interesting topic, but I think we ought to understand this with a broader context in terms of where we stand from a regulatory perspective. So the Hong Kong regulators, and it's also similar to other regulators in the world, they're quite clear that AI is not going to replace our existing compliance control framework or the legal decision making. It's still accountability. It still plays the responsibility on the institution, the individuals. So that is an important message from all regulators around the world. It's relatively consistent. But with that in mind, then what AI would do is to enhance, augment what we do today. So the regulators welcome this. As we can see in the HMA Gen AI paper that came out earlier, there are a lot of use cases, and in particular in the compliance world as well. So when we talk about AI-enabled AML, fraud detection, ongoing transaction monitoring, so those are kind of the clear examples of more substantive deployment of AI in a compliance context. But otherwise, it could get really practical as well. We see in the tokenization world, in terms of regulatory updates monitoring. It's as simple as that. Because tokenization or crypto operations or digital asset operations, it's often multi-jurisdiction. So our clients and also ourselves, we do need to look at quite a lot of different jurisdictions in terms of looking at the legal and regulatory compliance, where they stand, and in particular, there's quite a lot of development in each jurisdiction, and some are actually quite different, but most of them will, even if they go in the same direction, there's slight nuance in terms of development on whether it's product specific, or server specific. So even we see AI agents that helps just screen through the regulatory updates specific targeted to different areas that you want. So it could get as practical as that. And just one thing I noticed from the regulators' discussion as well is the AI versus AI concept, where you use AI tool to basically review or validate the output of another AI. And from a compliance perspective, it's good to see the regulators are open to this concept and they're exploring. And it's basically the make-a-checker concept from a compliance perspective, and how do we use AI for that going forward. So that's something that I think we'll see a lot more from a compliance perspective.
Very interesting. Geoff, from financial services perspective, how do you see the compliance side when you are applying AI or AI agent into payment, money movement, stablecoin, and do you think that is actually adding benefit, adding risk, and how would you mitigate if it's risk?
Sure. So, I mean, look, I think first of all, the term AI is a very broad term, and in many regards, banks have been using, advanced analytics for a very, very long time in its practices, whether it be around compliance, whether it be around anti-money laundering controls, et cetera, right? So, I think we need to be clear about kind of what we're talking about here as the incremental difference, right? So already, traditionally, banks have been using machine learning techniques for a long time to reduce error rates in settlement cycles, for example. But the challenges banks still face, and look, I mean, we're a global bank that operates in over 50 different markets. The standards across 50 different markets are not all the same. And so the real challenge comes, especially when you're doing international business, that you have all of these different bits of data coming in that are all different formats, many of them structured, many of them unstructured as well. And where Gen AI is really making a big difference is the ability to, let's call it, normalize that data much more easily for us. Now, blockchain, I think, actually takes it to the next level, because obviously blockchain kind of forces, by design, the data all to be normalized in very specific formats. But look, I mean, we're a little bit away from that today. So where we're seeing, real progress in terms of using Gen AI is actually developing much, much more advanced anti-fraud models, specifically. We're seeing Gen AI be very powerful in terms of certain activities around balance sheet optimization. So if you're in a securitization business, for example, you have literally, we have, hundreds of thousands of assets in our banking book that we're securitizing. We can take a process which today may take 4 days to kind of construct the right portfolio of assets to securitize. We're taking that down to about 2 hours, for example, right? Now, you marry that then with a world which is perhaps more on-chain, where the velocity of assets and liabilities is much faster, then that sort of advanced analytics, I think, is an absolute precondition to actually bringing more real-world assets on-chain. And then the final point, just to pick up on something that Rocky mentioned, I mean, a couple of years ago, we did a proof of concept with AWS, actually, where, once again, regulatory reporting, not a very fun topic, I have to say, but across 50 plus different jurisdictions, we actually used a public foundational large language model, and we could actually improve our regulatory risk reporting rates. Like, the accuracy went up dramatically. It was like a 90% improvement. And we actually filed 4 patents on the back of that. And that was literally just consuming, different sets of regulations from 50 plus jurisdictions that today, or in the past, sorry, that our Treasury risk team would have to kind of go through manually. And so these are the things that, they're often not very glamorous, I know, and perhaps the end customer doesn't feel it yet. But certainly, as I said, there are real advancements being made now in terms of the application of Gen AI.
Yeah, actually, everybody's been talking about how AI applies to payment. I don't know how fast that's going to happen, but obviously the operational improvement is definitely a very valuable attribute that AI adds to the process. So blockchain not only makes money move faster, but I think one of the things that blockchain also offers is that smart contract capability on the platform to make money programmable. Well, we call it intelligent payment. So, Marcos, I want to hear from you. Like when we talk about like using smart contract, so naturally smart contract and AI probably is a good marriage to facilitate each other to make things more efficient. How do you see that?
Okay, so I think there are three parts to this. I think the first part is actually what Alan mentioned earlier. In the blockchain world, the common standards are being built up right now, and we're seeing a lot of the new standards being built on the different chains, right? But on the e-commerce world these protocols are also being built. So in the last few years, we've seen different companies launching open source protocols. So you've got MCP, you've got A2A. A2A is how agents interact with agents. And in January this year, UCP was launched, right? The Unified Commerce Protocol. So this is a protocol where all the agents agree, or companies agree, that we'll use this way for agents to agree how we buy things online. So unlike the other two protocols, when UCP was launched in January, all the big players came together, right? So Google announced it, Shopify jumped on it, Alibaba jumped on it as well to say, hey, we need this because we're going to make it easier for people to use agents to actually purchase. Then if you converge that back to the blockchain world, I've got a bunch of digital assets here, which is on different wallets and different chains. Then they'll have agents to say, well, Alan has, different tokens, but he wants to buy the new, Blackpink ticket on Shopify. Maybe he's going to pay for it, tell the agents, just use all these smaller tokens where I don't really care, and just do it, and just pay for it, I'm fine with it. And the agents say, well, transaction fee is going to cost you like 0.1%, it's going to cost you some amount, he says yes, and it's done. So agents are doing the shopping for you. So this is the convergence where the AI and blockchain world starts to happen, where you're reducing friction for everyone. Then when you apply that to a smart contract, now, the trick about smart contracts is there are three parts. The person who wants to write a smart contract, so I think of it as, as a business. The person actually codes the smart contract, which is used to be the lawyers who write contracts. Now you need the lawyers who are also developers, who figure out how to write a smart contract. And then the final one in any contract is the risk and compliance team or the contracts team to make sure that it is what it is. I think we've got the part about get the requirements and how to write the contract done reasonably well so far. I think it's the last part in there where the lawyers and the contracts team will try to figure out, why this word, if you add the word there in there, it makes a completely different context, put a full stop here. It's beyond me. I don't understand. That's where Rocky comes in, right? I think that part has been the missing part, right? But I think in the agents world where, there's a Rocky AI, there's a specialist in writing these kind of contracts for e-commerce or for something, then it's going to be so much faster, so much easier in there. Then the auditors, will come and say, we've looked at the contract, we know what's happening on chain, it's verified, then it all works smoothly. Right now, smart contracts adoption is still slow because all the different parties are not coming together yet. But with the protocols in place and the standards in place, it's going to happen. We take for granted, like today, when you go in a browser, you just go to www.animocabrands.com or animoca.com. The browser uses a protocol, HTTP. That's the P in the protocol. Then we say, let's make it secured, put an S in there, and the security is done. So as these two converges, where the agents come in here with cybersecurity and so forth, we need common standards to actually adhere to. And I think we are going to get there in 2026 very, very fast because people have realized that companies have realized that we need to help our consumers spend their money easier.
Great example, and then great example with using Alan as an example.
Alan's got a lot of tokens, I'm pretty sure.
And Alan has some real life application that actually using RWA tokenization. So how do you actually apply smart contract in your practice? And what are some of the gotchas that you maybe can share with?
Yeah, I think maybe talk about one of the big benefit of smart contract is, because then it make it composable, which is one of the core philosophy of blockchain, right? So composability means that you can actually take that asset, especially in the context of financial instrument, to start doing lending, using it as a collateral. And this is not something that will be accessible to sort of normal people, right? Of course, if you have a lot of money, if if you have more than $1 million, you're a PI, then you can deal with a private bank. But normal people doesn't have access to collateral-based lending. But on blockchain, if you're buying RWA because of composability, that become much easier, right? So I think that is a key benefit of why people, in addition to the cost, the efficiency, the speed, composability and the DeFi opportunity that it opened up is one of the key attractions of RWA.
Great. And one thing that you brought up about smart contract, a digital form of agreement on blockchain, and also the actual legal aspect of smart contracts. So I want to hear from you, Rocky. What do you think when people start talking about smart contract as if once you program it on chain, it become legal and just legitimate in the real world?
Yeah, I think the smart contract idea is it's there. It doesn't change the fundamental on how a lawyer works or how the law works. A contract is contract. We still need the certainty. We still need the agreement. We still need the offer. So those all good elements will still be there. But it's about building those into the actual smart contract. And as Marcos mentioned, the user. You may not see all the efforts that have been put into the actual smart contract itself. It's a combination of a lot of work on the lawyer side and also on the technology side. So that's something that we see will have a lot more adoption. But for now, I think it's we are going towards that direction. But we need a lot of the other parts of the ecosystem for them to click together for that to have another stage of adoption.
So to continue that, where do you see the opportunities for like AI firms and tokenization platform and financial institutions to actually collaborate to continue to move forward this industry and also the technology usage?
Yeah, so I think it's quite clear that you can't do it alone. In terms of AI adoption, the AI firms can't do it themselves. In the blind, just develop AI agents, and maybe no one can use it in an efficient way. There's no point. Well, there will be points for the banks to learn about the technology, how to use it, but they can focus more on the financial side of things and be the user, deploy AI rather than developing it from scratch. We then have in the middle the IT infrastructure side of things. So we need, again, different stakeholders for the ecosystem to develop. So in terms of collaboration, then we see it nowadays. Lots of banks are doing it. The HMA Sandbox, we see it in the names that they published. It's not just banks, not just asset managers. There are a lot of technology firms in the sandbox together. And I think going forward, again, as Marcos mentioned, for agentic AI side, when we try to develop an AI agent that will actually do work for us, it's quite important to break down the goal, the actual solution we try to build. And in order to do that, then we need the actual user to explain, okay, typically this is how the process works, workflow, the logic, this is the end product we want. So we do need the communications from both sides. So it can't just be the AI firm just thinking, okay, that's usually how a law firm works or how a bank works, and we develop something. The AI agent side of things, I think it will get a lot more customized for different institutions, even if it's just banks, even if it's just law firms. it could get quite specific in terms of the AI solution they needed on a day-to-day basis. So I think that's it's just going to be an ongoing trend in terms of more collaboration.
Okay. So, Marcos, do you agree, or do you think there's other things that you would add to how AI firm and the traditional financial services can collaborate?
I think what Rocky mentioned is definitely on point. I think the things that add to it are, what Rocky said earlier, right? When they build agents or use agents, they're very careful about it, right? Especially in the agentic world in here. I think dealing and working with the reputable partners, reputable companies in there actually makes sense, because what we see in the agentic world, it's always the tip of the iceberg, right? All the checks and balances in there, are the agents doing the right thing? Are the agents actually behaving, and so forth? Those actually done behind the scenes, and that's why the larger corporates come in. It's a bit like, I think the analogy would be, if you go to a restaurant in Hong Kong, right? You want to go to a reputable restaurant that's licensed, right? Or if you're going to Macau to a casino, you want to go to a casino that's licensed. You do not want to go an underground casino in there, right? So the sense of fairness, the security, everything's actually in place in there, right? I think that's where we are looking at towards the agentic world or the AI world in there. And in this space, obviously, right now in 2026, I think the pace of developments and changes in the AI world will continue to be exponential. All the large frontier models we have today are all language-based, text-based. And I think, the pioneers in this space, like Yan LeCun, Li Fei, they've really moved past it. What their view is, large language models are good for certain needs and certain purposes in text, but it doesn't handle in other modes of input like sound, video, and so forth. So I think if we continue to look at this space, that space will evolve very quickly. The blockchain space, RWA space, I would say it will continue to improve, but at a slower pace, because that's the infrastructure play, right? Let the application folks, the AI, agentic worlds continue to go at a much faster pace. I think, when we come here, maybe next year and so forth, it'll be about what we've seen done more and more cases where it's done really well, and where there's some cases that it hasn't done so well. I think reputable companies, the big ones, will continue to actually excel in this area, yeah.
Yes, so Geoff, you talk about how financial services can incorporate AI to improve operational efficiency. When do you think that it would actually be incorporated into financial product? And what do you think the biggest hurdle would be at this point?
Sure. So look, we're already seeing primarily in the kind of wealth and retail space, Gen AI solutions being incorporated into customer-facing products, right? So typically, if you're a wealth client of a bank, your RM will do a portfolio review with you, make recommendations, et cetera, et cetera. That historically, you need to come out with a 70-page report, to justify the inevitable fees the wealth manager's charging you, and it would be a very painful process for everybody, right? And we now use Gen AI to generate these reports. We can provide a very crisp 2-page summary for a client, and the interaction then between us and the client is much better. When it comes to the institutional side of the business, though, the introduction of Gen AI at the kind of customer-facing level is much slower. Now, there are reasons for that. Part of it is that obviously, at an institutional level, often the customers themselves are much more regulated. So they have their own processes that they have to re-engineer to adopt an AI first solution. But to be honest, I think a lot of that is just a maturity curve problem. I think to some degree, this is not an AI specific point. This is, I think, a point which is germane to any sort of technological innovation, is that I think we can fetishize the tech a little bit. Too often, people start running around with their hair on fire, dreaming of all these wonderful ways in which we can use blockchain or AI to do things. And very often they forget, well, what is the actual problem we're solving for? How does that actually impact the customer? And people massively underestimate that often it's the behavioral change that's the hardest bit. The tech actually at some point becomes relatively trivial to deploy, right? I mean, rewind the clock even 12 months, right? Now, what the large tech firms have got out there in terms of product off the shelf that you can now deploy, is just mind-boggling, right? I mean, objectively, some of the stuff coming out of Claude or ChatGPT, et cetera, is far superior to what traditionally we've had thousands of people spending lots of time producing. So if that's the case, why can't we just use it, right? Sort of odd, right? But there's a huge behavioral element, right? Do we trust it? Do clients trust it, right? I mean, it's a little bit embarrassing, this story, but I'll tell it anyway. I was in one of our smaller markets at the end of last year, and I was speaking to one of our compliance officers. And she asked me, Geoff, so what's going on with all this AI stuff? How are we going to use it? And I told her what we were doing, and she shook her head and said, yeah, I just don't trust this AI stuff. This is like, it didn't matter what explanation I gave, how I could talk her through, how it works and, why the error rates might be better, et cetera. It was just a gut feeling, a heuristic of it's new and I don't trust it. And look, I mean, the reality is that person has agency, right? Are they going to use it in what they do? And the answer is probably not. Now, we can all sit here and go, well, maybe those people aren't going to survive, et cetera. Okay, sure, maybe. But the reality is today they're still in the seat and they still make decisions and they still impact the way in which the firm operates. So I think we're massively underestimating the behavioral challenge of getting clients to adopt new technology. I think it's wonderful that we can all be here together today to discuss the possibilities of the future. But I think often we need to go back and respect the fact that clients don't always have value the same things that we do.
Yep, I agree. And so, Alan, where do you see the biggest opportunity? So, along the same line, where do you see the biggest opportunity for AI firm to collaborate with financial products?
I actually want to pick up on trust, and I think that is the answer to your question, right? Blockchain has solved the hard trust, right? Because in the world of agent-to-agent transaction, they're going to be doing a lot of things. And how do you know they've done what they've done? And I think blockchain is the perfect solution. You can verify it, it's immutable. That's the hard trust, right? But the soft trust, why should human use it, right? And how do teams trust that, this is not going to take away my job, that, this is not going to screw things up, in mission-critical operation. And I think this is really what's happening. I spent a lot of time in the US last year, and basically corporate America is in a phase of AI anxiety where the boss really want to implement AI, and no one in the teams want to do it because the team is asking, what's in it for me? Right? The boss want to do it. They go on all the analyst call and say, we're implementing AI, it's getting productivity gain, but no one in the team actually really want to move aggressively forward because of trust, because of uncertainty around what they're going to do in the future. So I think until trust, the softer part of trust is solved, AI adoption will continue to be pulled back.
Great. So we have a couple of minutes left, so I want to wrap this up with a prediction. So I want to ask you guys to predict where do you think AI tokenization will be in I don't want to say 3 to 5 years. 5 years so long in these days. So let's say 3 years, 1 to 3 years. Rocky, I'm going to start from you.
I'll just be really quick. I think just from a people element perspective, behavior, I think in 3 years' time, whether you like it or not, you need to know how to use it at least, and what to use it for, and how to. I mean, 3 years is too long. Definitely within 3 years, I think the full workforce, everyone need to be upskilled in terms of AI, tokenization, digital assets.
I think for me, in the next 12 to 18 months, there's going to be a lot more transparency as to what this is, because that will build the trust in there. I think that's one. And the second one in here is going to be sovereignty, right? Each region will have their own version of what AI can and cannot do, and what are the local standards in there. I think having one unified wallet or one unified way of doing things globally, it's not going to happen. I think it's because the regulations are driving us in a way where I'm going to need something for each region that I'll be in. Yeah.
Okay, so I think that we're going to see massive advances in the application of AI and tokenization in a lot of what we do in financial services. It is not going to be global. There are definitely going to be jurisdictions that make it very hard for us to adopt the technology at any scale. But we will start to see category winners emerge in terms of those organizations and those clients and the partners in the ecosystem that are able to, number one, implement agentic AI at scale. Today, no one's done it. Right? I do believe within 3 years, there will be a small minority of organizations that will have done it at scale. And with respect to tokenization, I think we're predicting 2 trillion of tokenized RWA by 2028. I think that's our official research line.
Yeah, I think that's what you guys put on press release.
I think there'll be a visible part and an invisible part. I think the visible part is, I think there'll be a lot more AI adoption beyond just text and LLM. I think it'll be multimodal. I think we'll all have our wearable, hopefully. I certainly want my AI glasses when I go travel, so I don't need to look at the map. So should happen in the next couple of years. And I think there'll be an invisible aspect, which is, it really is rewiring the operating system for finance. And I think a lot of it will happen without the general public knowing it, because it's just faster, more efficient. So I think that OS will get updated.
Awesome. Well, thank you so much for the panel today. I learned a lot myself, and I think this is great discussion. Thank you.